Gold's technicals not looking so great. Jim Wyckoff breaks it down for us next. Jim Wyckoff joins me this Thursday morning. Jim, thanks for being with us.
Hello, Daniela. Always nice to be with you.
So, Jim, we saw gold hit hard after the FOMC on Wednesday. Last time we spoke, I know you were looking at a key support level for gold at $12.51. Obviously, gold breaking below that level now. What's next, Jim?
Yes, Daniela, we hit a 4.5-month low in the gold market this week. More technical selling pressure. And then we had the FOMC minutes on Wednesday afternoon that the marketplace read as a bit hawkish, meaning that the tapering of U.S. monetary policy may now come sooner rather than later, although that's still being debated in the marketplace and certainly not any clear consensus on that. But the next downside price objective for February Comex gold is the $1,200 level.
And Jim, we'll be getting your key levels for gold and silver in a bit, but what did you make of gold's reaction to the FOMC on Wednesday?
Daniela, my take on it was that traders were looking for some bullish event, or actually the bulls were looking for some kind of bullish wording coming out of that, and it didn't happen. And then the path of least resistance for prices has been sideways to lower, and some selling occurred, some sell stops were hit to drive prices to the new multi-month low. I don't think that anything surprising came out of those FOMC minutes, but it was just a lack of bullish news that the bulls were hoping to see that didn't occur.
Jim, in your morning report, you mentioned how ECB President Mario Draghi says that the EU has seen disinflation for several months and how he doesn't feel deflation is a threat to the EU. What do you make of Draghi's comments, Jim? Is there a threat there, and what could this mean for the metals?
Well, Daniela, my take on this deflationary scenario is that the central bankers of the world probably are a little bit more worried about deflation than they're letting on. Certainly, Mario Draghi or Ben Bernanke or soon to be Janet Yellen, they're not going to come out and say they're extremely worried about deflationary pressures because that could spook the marketplace. But I really think that is a fear among the major central bankers of the world. And, you know, we've seen raw commodity markets the past few months and certainly the last several weeks in a more pronounced fashion really having some downside price pressure led by crude oil, and that's certainly a concern. Deflation is the arch enemy of a raw commodity market bull.
All right, Jim, let's look at key levels for gold and silver right now and your Wyckoff market rating.
Daniela, I'm giving February Comex gold a Wyckoff market rating of 2.5. That's fully in the near-term bearish camp. We've got solid chart support at 1,200. Psychological resistance at 1,300. We're kind of trapped right in the middle of that range right now. But the path of least resistance for the gold market has been and will continue to be sideways to lower until we get some kind of an early bullish technical clue to suggest otherwise. For silver, Daniela, we've got solid chart support at the summertime low of 1929 in March silver. Solid overhead resistance at 21.
Technicals looking terrible right now, Jim.
Yeah, my Wyckoff market rating for silver is also at 2.5, Daniela, and silver just hit a multi-month low this week also. Silver has been following the gold market, likely going to continue to be the case. The gold market, bulls just are needing some fresh, bullish, fundamental inputs, and they just have not received them recently.
Thanks so much, Jim, and thank you for watching this edition of Technically Speaking with Jim Wyckoff. You can email us at newsfeedback@kitco.com or follow me on Twitter at Daniela Camboni. Thanks for watching.